Hi, I'm Kep Kepner, CPA here in Dallas. Well, Congress finally passed the Tax Act that we as business owners have been waiting for. The Congress decided to make certain deductions permanent. They gave a 2-year reprieve for other deductions, and they created some deductions that have a phase-out period over time. So one of the biggest is the ability to write off equipment purchase. It's called the 179 write-off because it refers to the section 179 of the tax code. If you buy $500,000 of equipment in December, you get to write that off this year. Whether you paid for it in cash, whether you financed it, doesn't matter. If you bought it and took possession of it, you can write it off this year. So one thing to do this time of year, at the end of the year, is strategize about that. Decide when you really want to take possession of equipment that you're going to buy. Another thing, the expired tax bill gave us was the extension of the 50% bonus depreciation. If you buy new equipment, you can write 50% of it off in the current year. Now that falls in 2018 to 40% and in 2019 to 30%. So think about it. Why would Congress, with help from their friends at the IRS, write a tax bill that lets you write off all this? Well, this is for new equipment. They want the sellers of that equipment to get sales, to make profit, to invest back in plant and equipment, to build more of their product, to hire more people. That's the reason that that's in the Tax Act. There are some work opportunity credits for challenged workers, and some industries have learned how to take advantage of that. Some of the provisions in the Tax Act actually got a 2-year reprieve. One of those is that if you are upside down on your house and you are foreclosed on and the mortgagor takes your house and gives you a 1099 for the debt that they're forgiving, well, you don't have to pay tax on that debt. That's been extended for 2 years and it's up to $2 million. So think about it. If you're one of these cats that went out and overspent what you were making and bought a huge expensive house, then you'll be able to take that loss and not have to pay tax on it. So that's a really good deal for folks like you. The above-the-line deductions for college tuition has also been saved, and that'll help those of you who have kids going to college. Now, I want you to think about it. In the course of our entire history, we've always had the position that college education was the responsibility of the family. So don't look to the business that you have or yourself as a family to be able to get huge deductions for college, because that's generally thought of as a personal expense. So you go spend $30,000, $40,000 on your kid's education this year, and all you're going to get is a $4,000 write-off or a $1,250 credit. That's not very much. So you need to be planning for your kid's education, and maybe your plan is to trap them with $100,000 worth of debt when they get out. I don't think that's a very good plan for you, nor do I think it's a good plan for your kids. But don't look for Uncle Sam to bail you out. So that's one of the things to consider. There are some energy tax breaks that also got extended. So there are a number of things in the tax bill at the end of the year that help us as taxpayers and help us as business owners. If you need help navigating through all of that, we'll be glad to help you. Thanks.